My next guest, he is a Tesla shareholder, has called himself a big believer in that stock since the end of last year. Let's bring in Eric Jackson of EMJ Capital. It's good to see you. What's behind this move, do you think? 10 straight days is something to pay attention to. What's driving that?
I think there's two things, Scott. I think it's the fact that we've gotten away from all the worries and angst about Elon and Twitter. We've gotten away from, fearing that, the price cuts, that's sort of in the distant memory now. And I think people are looking ahead to the fact that they've already sort of guided to record deliveries this year, which everyone likes. And also, I think the biggest part of the move has been the AI story in relation to Tesla. They obviously have a huge gob of data from everyone using the cars. And there are some intriguing ways which they're going to be able to leverage that in the coming years. I think that's getting people excited.
I know, but at what point do you sit back yourself and say, well, Tesla's apparently getting an AI bump, XYZ company's getting an AI bump. I ran into somebody on the street who's got a company who wants an AI bump. You get my point? Like, everybody thinks they're going to get an AI bump. What's justified really and what's not?
Well, I mean, listen, Scott, I believe in AI. I'm eating the dog food. I've spent the last 2 years actually building our own proprietary AI and ML-driven stock picking model to use in my long-short tech hedge fund. And just on June 1st, we went live. We burned the boats. I turned my back on being a kind of a fundamental manager to rely on this model because the results that we were seeing, especially this year, had gotten so much better from a performance perspective, from a risk management perspective, that I was convinced, and I thought my investors are going to be better served by trusting the machine rather than Eric Jackson's views on Tesla deliveries. So so far it's going well. We're only 1 week in. We got to crawl, walk, run, but it's already paying dividends big time. Not just with Tesla this month, but also Carvana.
You have to explain to me more how this works. And you'll forgive my skepticism, but I don't know. I don't know how to respond to that. You are now taking yourself out of this entire stock picking model and relying on machine learning to do it?
Yeah, well, you had Leslie Picker was on the network earlier today talking about how a lot of tech hedge funds were up in May because they made big bets on AI stocks. That's sort of like first derivative way of playing AI. I think, though, obviously AI is going to disrupt the whole financial industry, including the hedge fund industry. And I think the traditional hedge fund bros, the latte sipping, gray fleece vest wearing, 20-something MBAs who crank out, spreadsheets, are going to, see their jobs in peril from AI simply because machines can keep more factors in their brains going much easier and spot opportunities. So, Carvana was a number 2 holding for me when we flipped over on June the 1st. Now, I guarantee you, if I had a team of 20-something MBAs working for me and we had an investment committee meeting, none of them would have come up in a meeting and pounded the table to go long Carvana, let alone make it a number 2 holding in the fund. And the reason why is that Carvana was down 98% last year.
Yeah, it was a disaster.
They were feared for their own career suicide in making the case for it. I trust the machine. The machine doesn't get embarrassed. The machine just gives me the facts. I would rather go with that rather than someone who's trying to curry favor.
But I mean, what you've owned Carvana for a while, haven't you?
Off and on. Obviously, it was down 98% in 2002 if you bought and held Carvana. So, obviously, you would have been run over if you just kind of stuck to your guns as a fundamental manager and believed in the stock, believed in the story. Even if you were right, the market wasn't agreeing with you.
I know, but what did the machine possibly tell you to do? I don't get it.
Well, the machine tells me, basically there are 300 stocks globally, Scott, that are tech stocks, the largest ones. And every one of those stocks, the factors that go into, what drives the stock up and what drives the stock down, is unique. And so the machine learning program that we've built over the last couple of years identifies kind of the optimal strategy for each one. So if I only traded that model for Carvana last year, I would have made 4%. Trading in and out of the stock. This year, the model caught the 158% up move in Carvana in January in the first 5 weeks of the year. So when the model flagged Carvana on May I think it was the 7th, when it was 1185, I took it very seriously. And so, this is a volatile stock. It's up whatever it is today, 60-some percent. It could be, down 20% tomorrow, or it could be up another, 85% tomorrow. But, I would rather place my trust in the machine, giving me my instructions on when to get out rather than, the hedge fund bro 20-something.